Hey everyone, it's Matt with EquiPredict.com. Thanks so much for tuning into this video. We did have a subscriber reach out to us asking if we could do a video just on a pure price action trading strategy, and that's what we're going to cover. We're not going to be using anything else except the pure price action and a simple moving average of 18 on each one of the time frames that we're going to be covering. And this is an easy to understand and profitable trading strategy. You just need to do a little bit of your homework up front. And again, if you're enjoying some of the content we're providing, please do subscribe to the channel. You can also head over to our website, EquiPredict.com, and you can gather a lot of tips on timing your entries as well as forecasting the stock market. That makes it a bit easier instead of just focusing on pure price action alone. So again, it's EquiPredict.com. So this is our EquiPredict model. We're not going to be using this. This tells us, however, that this is Hubble, the chart of Hubble. It's in the technology space. Tells us that our next buy point that we should be looking to be a buyer is in July. End of July going into August for Hubble, and that's what the EquiPredict model is telling us in this particular case. The next one is going to be closer to 2026, sometime in November of 2025. So we've got a bit of an issue coming up. Possibly a lot of models are telling us that we might have a bit of a problem in mid 2025 with regards to a potential bear market. There's still a lot of developing information in terms of our charts and everything, but nonetheless, the party's still on, the music's still playing, and I think we have a lot of good upside ahead through the end of 2024. So again, just jumping into just the pure price action, we are going to be tying in a simple moving average of 18. I would recommend it. You don't have to have it, but I would recommend using it. This is the monthly chart again of Hubble without the EquiPredict model overlaid, and we'll jump right in. So one of the things I'd first recommend is to make sure that you know, when you come across a stock from a friend or a scan you might have set up, whatever it might be, they say, hey, listen, you gotta buy this, or this scan result says this is a good time to be looking at this particular stock. Always, my recommendation, you can do what you like, but always recommend is looking at the larger time frame first. I always go right to the monthly first. I want to see what kind of trend is in place, and obviously this is Hubble, and ever since, I mean, before 2019, it's had a nice uptrend. There's a lot of demand for the stock. Institutions are snapping this up every time it pulls back, and I think that's going to continue through the rest of this year, and again into 2025 we might start running into an issue, but nonetheless, I digress a little bit. The problem with Hubble at this particular point in time is it's a little bit late stage. It's getting turning into sort of that parabolic up move. These usually resolve at some point to the downside to a more significant breakout point, maybe down here around, I think this is around $327 per share, or maybe even less than that, maybe $300 per share. I don't have the price on me at the very present moment, but you know, just something to keep in mind is that you want to always be kind of two minds when you're developing a trading strategy using only price action. You want to have a larger time frame in your mind while you're looking at the smaller time frames. Hope that makes sense. So each time you can see that the price came down and met with the 18 month moving average, it was a great time to pick up shares, and I think we're going to be getting close to that, but not quite, because there's so much demand in the technology space, so much demand in the electrical component space. I think we won't really tag the 18-month moving average in this particular next kind of move downwards, which it's already obviously begun. I don't know if we're gonna get there in this particular run, and I'll kind of show you why in the smaller time frames. But it is a good idea to keep in mind that, you know, great things happen essentially with stock prices when they are above a rising 18-month moving average. So the next time frame we're going to hop down to is essentially your weekly time frame, and as you're going to see, it's going to get a bit busier as we hop down. One of the things I would always encourage you to keep in mind is you want to see that 18 period moving average moving is either flat or starting to curl upwards. Those are really areas where you are at lower risk for a drop. You're a little bit late to the party, so you're going to leave some money on the table because the 18, you know, or a moving average of any type really is a lagging indicator, so it's late to the game anyway. But again, we're just trying to use as little indicators as possible, preferably none. We're just using the SMA 18, and again, your best entries are going to happen when that 18 period moving average is starting to curl upwards from either a flat position or it's kind of gentle sloping down. And what I mean by that is an example I'll just show you here. You can see right here the 18, which is that pink line here, had sort of started to curl down. Any one of these entries essentially would have been a little bit of a higher risk entry. However, yes, the price popped above the SMA 18 at that time. It started to curl up. You're late to the party. You're not getting in down here where most likely institutions and more speculative traders are getting in, but you are riding a nice trend for several weeks from late April all the way until August of 2023. I mean, you can't argue with that. And so that's what I'd recommend. Just kind of, again, another piece of tidbit, or another tidbit of education to keep in mind, is that the 18 period moving average, you want to be flat or curling upwards when you're taking on this strategy. You also want to be drawing in these trend lines. Trend lines are great. They help to kind of center what you should be looking for, and kind of center your mind, your frame of mind, in terms of when you should be looking for your trigger for entry. All these, these indicators that we have that are overlaid on these charts, they're merely signals. They're evidence of. I like to think of them as sort of supporting evidence once a price has broken above a particular trend line, a particular area of support or resistance. These particular indicators are just merely evidence proving that what you're seeing is genuine. So I hope that makes sense when you do tie in your indicators on your screens. And so in this particular case, again, not getting too far off track here, you want the 18 to be moving up. You want the price action to pierce and close above a moving 18. That's a great entry. Again, a little late to the party, but you're going to catch some nice trends doing that. One thing you can also do is, if you have patience and you've got alerts set up and you don't have too many to drive you crazy, you can also look at where the most recent breakout occurred here in 2023. Price came up and then it fell. These are essentially, in my opinion, and I think a lot of others, this area right here where the price came down and stabbed that point of breakout here from 2023 all the way in late 2023 was an area where the machines are taking out stops. So what they want to see is, institutions, they want you to be buying shares, probably I would say here. Because again, they know that everyone's focused on these SMA 18s. It's rising, looks like a good entry. But however, it's risky, because if you're going to be entering here, a lot of folks are going to put their stops here or here or here. But this is the machines coming in and taking out stops, and it's also an area where the institutions are going to be picking up shares from the prior breakout. So my recommendation is you let things unfold a bit more, especially if you have a nice violent down bar like this. Okay, this tells you there's a lot of selling pressure up here, up in this range. You get a lot of selling pressure. So entering in here, I would have waited, because of this bar tells us that there's a lot of selling pressure coming down. I would have waited. Yes, okay, quick 2 to 3, 4 week profit and exit, fine, but I'd rather wait to see how it's going to play out. I want to see what that 18 is going to do. I want to see it sort of calmly start to make its way to the upside again, and that's sort of what's happened here later on in the game. So once you got into November, into again a bullish period in the stock market, typically, historically, each year, you had the price start to break up. It broke the trend line that you have right here. And then it started to close above that 18, which is starting to flatten out. So any entry here or here would have been absolutely ideal. Again, we're just using price action, no indicators. We just want to use the SMA 18, and we want to draw a trend line. It did meet those two pieces of criteria, and we can also look back in history and see we didn't participate where the institutions participated that week and got in where it last broke out. That's okay. We're just going to ride the coattails of the institutions on the way up to its next stop. And so that's what happens. So these 2 weeks going into December of 2023 were an excellent place to enter. The market also was bullish at that time as well. So you want the market to align with what you decide to do as well. If there's market pressure, which there actually is right now, even though it's a bit hidden, because the large caps are taking us higher as we speak right now, but there's not a whole lot of great breadth in the market, and that's a bit of a warning signal in itself. But nonetheless, we're going to hop down now to the daily. I don't want to get too into the weeds here. And just to kind of talk about these two options I've laid out here, you can set for yourself when it comes down to, for example, where we are today. You have a first option and you have a second option, in my opinion. Again, keeping the larger time frame in your mind, the monthly time frame in mind. Option 1, you can pick it up at the breakout here around $327 per share, or you can wait until the price breaks to the upside and breaks this trend line going upwards, possibly pulls back to meet a flattening 18 and then a go up to your next high. Got to keep your stops in place, obviously. Always keep that in mind, but I believe that you have a nice 1 or 2 option scenario here for where we are right now in the Hubble stock. So now we're going to hop down to the daily charts. Again, it gets a bit more busy. You can kind of see here that we had a significant break here in the uptrend line. So we're going into April of 2024. A lot of stocks did sell off at that time. And again, if you can, I'm just pointing this out because I think it's important to know that this was not an entry. So the reason why is because you had, again, another violent selling pressure area right here. If the stock breaks a trend line, starts to pop up, and then you've got this violent down move, yes, just because you broke a trend line that touched upon these 2 or 3 places, it's a little risky. You want that, again, 18, you want that sort of price action to start to rise up and then come back down and meet a rising or flattening 18 at that time to go ahead and take your entry, in my opinion. That's the trading strategy I use. It's much more profitable than trying to enter here for a long position and then just getting crushed the whole way down. Again, let the charts communicate to you what's going to unfold, essentially. And the fact that there was so much selling pressure right here in this these particular days told me that trying to catch the break of the downtrend line here was way too risky. I want to see that unfold even further. The one thing we do have working for us here on the daily chart of Hubble is that you've got essentially 3 drives happening. One's here in May, another one here in June, and another one here at the beginning of July. This one did break, this last drive did break, but it closed back above of this sort of support line here, which is, I think, a good sign going into August. But nonetheless, you can see that the 18 really is looking a little bit messy. You want this to kind of even out. And again, I'm going to reiterate multiple times, you want that 18 to kind of rise with the price and then possibly meet the 18 for a nice entry here sometime in early August or late July. So we'll hop down to our last chart, which is actually going to be our hourly chart. You're going to see this is a bit busier, and this is where, again, you need to be sure that you're always focusing on that larger time frame, that monthly time frame. You have to kind of keep 2 minds, on the left side of your mind or back of your mind, if you will. Have that monthly time frame in mind as you're looking at these hourly charts. And what you can see here is that I keep focusing on that SMA 18 in conjunction with the price action. You can see here that the entry trying to go long here was not a good idea because, again, the SMA 18 really never got above a particular point in the charts. Okay, you had sort of this failure every time. Every time it got up here, it didn't. The SMA 18 wasn't impressive. It didn't get too much higher than the previous peak of an SMA 18. So again, it tells you that there's a lot of weakness. Also, the fact that we've got 3 drives here to the upside that failed in this particular period. So this is a pretty strong area of resistance, and just something to keep in mind as you catch the next uptrend in Hubble, which we believe is going to happen around somewhere between the 15th and August 1st. Is going to be your next uptrend. So I hope this sort of makes sense in terms of how the price action trading strategy should work. Always start from the larger time frames, excuse me, and work your way down through weekly, daily, hourly. You can go down to 30 minutes, but always be keeping in mind that larger time frame. Look for that 18 to start curling upwards. You want a nice orderly rise and break above sort of a downtrend line. In this particular case, we have your classic typical falling wedge. They typically resolve themselves 2/3 into it. It could certainly break to the downside, and if you remember from the larger time frame, I'm just going to hop back up to the monthly. I think is fine. Is that's going to be around $327 per share. That's a long fall. It's a long way down from where we are right now here. I think around 350 or 360 or so, I believe. But nonetheless, it's going to resolve itself one way or the other. So we want to see it resolve itself to the upside. Preferably, this 18 starts to curl around, and the 18 gets significantly higher than the 18 here on June 24th. Hopefully, maybe around the 29th or August 1st, we get up here closer to the SMA 18 gets up here and then pulls back to, or excuse me, the price action gets up here, pulls back to a rising SMA 18 that's now above where it was on June 24th, and then a nice little entry here to ride the coattails of the institutions all the way up to your next area of profit taking or exit. So I hope that trading strategy makes sense. I hope it helps. You want to focus on just, again, pure price action and an 18 period moving average. Just be aware of the larger time frames as you're climbing down through the smaller time frames. Good luck and happy trading. And again, please do subscribe to the channel if you enjoyed the content, and also head over to the website equipredict.com and pick up some tips over there. Take care.